It's figuring out what you want to do that's different, build that, focus on that. We're very focused in the vertical that is home protection. As you know, there are other InsurTechs that go horizontally. I'm not saying it's wrong. I'm just saying it's different than what we do. We want to dig deep into protecting people's homes and things related to that. So as we continue to grow in new product innovation and new product ideas, you'll see it a common theme that it's in that space. I'm Rick McCathron, President of Hippo Insurance, and this is the future of insurance.
This episode is brought to you by SimpliSafe. Since 2006, SimpliSafe has protected millions of people with a guiding goal to make every home secure. That's why they're ranked #1 for the best home security systems of 2022 by U.S. News & World Report. SimpliSafe partners with insurers like Hippo to offer homeowners a professionally monitored smart home security solution that helps carriers increase conversion, reduce churn, and gain customer insights while reducing risk by protecting against water, fire, and theft. By partnering with SimpliSafe, you can offer their award-winning technology to your home or small business customers at no cost. Learn more at simplisafe.com/partner-with-us. Rick, it's great to sit down with you again. It's been quite a journey. I think the first time we did an interview was maybe 2 years ago for a Reuters event, almost just around something like that, around 2 years ago.
Yeah, that sounds right. And Brian, it's always a pleasure. You have such unique insights that I love chatting about. So,
well, thank
awesome.
You guys have been quite a journey since then, and I want to get into what is Hippo. Who are you? How did this all come to be? But 2 years ago may not feel like that long, but at least to me. But to you, like you guys have, I don't know, tripled the size of the business, something like that. You've added more to the team. You've added new products. You've gone into the condo space. You've gone public. I mean, there's a ton that has happened in 2 years.
You've got to understand, Hippo years are like 15. So I've spent a career in the last 2. So, but yes, there are days where it seems to fly by and days where it seems to drag on. But generally, we move quick at Hippo, and we're pretty pleased with what we've done in the last couple of years.
Well, so give us a little high level on you, and then I want to hear the spiel on the company for people who don't know, or maybe only know from the kind of, the hype cycle of InsurTech without knowing the substance behind it. But who are you, Rick?
Happy to. So I've been in the insurance space almost 30 years, starting at public companies like Mercury Insurance, shifting over to the distribution side, companies like Superior Access and First Connect. Did a few startups, home value protection, just really been in the space holistically for 30 years. I grew up in an agency family. So that's 30 years post-college. Pre-college, I was doing this in diapers. So I've been around a long time. And I do think that's something that really attracted me to Hippo in the early years. The idea that this just isn't a tech company. This is an InsurTech company, and that means something.
So you're not one of these, I got into insurance by accident people. It was genetic, at least.
That's right.
Why did the InsurTech side of it attract you versus something more traditional? And obviously you had time in the more traditional kind of space, but it sounds like you were also playing around in things or spending time in things that were not just bread and butter, kind of giant multi-line monolithic, traditional insurers.
Yeah, no, it's really interesting because even when I had very senior roles at insurance organizations, just the sheer amount of time it would take to get anything to market, to navigate the bureaucracy, to sort of try to get people off the lowest common denominator of this is just the way we've always done thing sort of comment. That was something that really appealed to me at InsurTechs generally. It was how quickly can you deploy something to market, and then when you screw it up, how quickly can you change it? It's a conversation. We have a relatively new chief underwriting officer. He came from AIG as their global chief underwriting officer of personal lines. And he was so impressed by how quickly we could deploy new data, new product, new rates, new underwriting guidelines. And that was certainly what appealed to me in joining Hippo.
Yeah. I got to meet him in December at an event in New York, which was really cool. You guys are spreading out all over the country. You got people everywhere.
I think everybody has everywhere in a COVID world. I joke that we have 650 offices because although most of the people are starting to get back in the office now.
Yeah. So give people a little bit of a sense of what Hippo is. What's the product space? What's the history of the company?
Yeah, we really exist to protect the joy of homeownership to our customers. And a lot of people go, oh, what? So you're a home insurance company. And that's not really it. We are a holistic home protection platform. Insurance is very important to that, right? It's very important when everything else goes wrong. Are we there to take care of our customers? We are a customer first organization. Now, with that, we think the best claims experience is avoiding the claim entirely. So what we do from the sort of Hippo Smart Homes program, which uses IoT devices, risk mitigation, proactive home services, preventative maintenance, really everything to try to protect that joy of home ownership, so the customer can focus on making memories, and we can focus on all the crap that goes wrong in between those memories.
So everybody talks about getting to proactive. What are some of the things that you're doing to actually get there? And one of the things I want to hear in particular is this last mile problem, that like getting the kit to the house is easy, but getting it installed and not just having it be alarms, but things that can take action or can get action taken quicker is really tricky, especially in personal lines where you don't have, a facilities management crew that's there every day that can install things or do it. How do you make that more accessible for homeowners?
Yeah, first of all, this is not something like we woke up one day and it was, hey, we have a 70+% adoption rate and activation rate of our devices. This is something that took iteration after iteration, education after education, just really focused on tremendous effort, really to get the customers to understand what makes sense. And it's not every customer, frankly. We've identified what we call generation better customers, ones that really want to partner with somebody to help protect their home. And those customers are great partners of ours to make sure that we get the devices installed. Now, I also think it's relevant to say not every customer wants all the devices or each type of device. So when a customer goes to hippo.com or works with one of our agent partners or one of our home builders or smart home companies that we partner with, loan originators, loan servicers, title companies, mortgage companies, you name it, they have an opportunity to opt in. Now, most customers do. As I mentioned, we're over 70% opt-in and activation rate, but they have a choice all the way from your sort of basic DIY kits all the way through professionally installed, professionally monitored kits. And that's really where the differentiator comes, is those professionally installed and professionally monitored kits. All the way to the extreme, our home building partner, Lennar, which is one of the largest home builders in the US, they build somewhere between 60 and 75,000 new homes a year. Every Lennar new home comes with a water shutoff device where they install it during time of construction. So that removes all the friction, yet gives all the benefit of a device that really does all but eliminate interior water.
Yeah, that's a huge source of loss globally, not just in the US. Yeah, I mean, working at a global carrier on the homeowner side before, our European book was just getting hammered by escape of water. And it's, a lot of older houses, harder to retrofit that stuff. So if you can build that in, and you can retrofit it, but if you can build it in from the start, homeowners didn't even have to make a decision. It's just there. You're protected before the risk could even materialize.
That's right. And that's our focus. And, a lot of folks say, well, are you ever going to manufacture a device? And I'm like, heck no. Because the rate of change in devices and their capabilities is like faster than InsurTech.
Yeah.
You see, companies like Ring coming out with super cool devices, and it's a matter of, you've got to be able to adapt what you're doing very quickly. And I think that's what InsurTech is about, not just on the insurance product side, on the pricing side, the data side, but also on the mitigation side. And so that speed really matters.
Rick, I want to press you on something on the tech side though, because when you talk about not building the IoT kit, that makes total sense, but you guys did build your tech stack, and a lot of the tech is done in-house, and that seemed to be part of the DNA. Why is it okay on the tech side? And traditionally insurers are not great creators of systems, and yet we did it anyway. But you guys, that's been a key point for you, and seems like it's part of who you will be going forward. Why is that different then?
Yeah, I think it's critical, frankly. Anytime I talk to a startup, they say, hey, should we get an off-the-shelf system or should we invest and build our own tech stack? And I tell them, from my perspective, you have no choice. The real IP of an InsurTech is that tech stack.
Hmm.
And at the risk of saying something controversial, I'll go back to, I've been in industry incumbent for like 30 years. The real problem that I think the industry incumbents have is not just that they have old legacy systems that it takes a lot of time, energy, and effort to sort of shift out of. It's the quality of the engineers, the quality of the developers. If you look at, at our developers, they're sitting in places like Palo Alto and Tel Aviv. These are the same types of engineers that come from places like, Facebook and Amazon and LinkedIn, sort of the Silicon Valley tech companies. And the analogy that I like to use, as you know, Brian, I've got twin 15-year-old boys who play basketball. LeBron James also plays basketball. It's the same sport. It's a very different game. And when you look at what a Silicon Valley tech developer can build, it is like nothing you've ever seen. And I didn't believe it when I first started at Hippo over 5 years ago. I remember talking to Asaf and asking, so what are we going to do with the tech stack? He's like, oh, we're going to build our own. And I'm like, oh, call me in 18 months, and then maybe I'll come work for you.
Yeah.
And he said, no, it's 6 weeks. And I called BS, to be completely honest. Sure. And, it took me about 6 weeks to actually start. So when I started on my first day, I looked at it and it was like nothing I'd ever seen. I mean, it really is a differentiator. And I think it's a requirement if you're going to really play in this game.
Yeah. There's people on both sides of that fence. I think you're right on the resource side. I think it's also how you empower the resources, right? Because the best developers with the worst controls and management and tools, it's just wasted. But yeah, I mean, for the people who have done it, they've talked about what an unlock that is and their ability to respond. So some of the new things that you've been doing on the prevention side and the services side, to have the technical capabilities, I always say with data, like that IoT, it's turning out data. Most traditional carriers and traditional tech solutions wouldn't really have a way to do anything with that data, except maybe on renewal. But,
that's right.
And maybe we don't do anything with it yet, but what if there's a point when we do, to be more dynamic in our underwriting or responsive, if your system can't contemplate that, then it's just an attachment to a risk file, which is not data.
Yeah, I think if you were to boil down what is a successful InsurTech application, it really boils down to a couple different things. First, it's the speed in which you can react to a changing environment. Second, it's putting the customer first. Those two things are really what differentiates InsurTechs from the incumbents and then InsurTech amongst InsurTech. I'll give you an example. When COVID hit, a lot of the auto players, and look, I've got no dog in this hunt, right? We don't do auto. We're not going to do auto. We cross-sell auto with some of our partners, but we don't manufacture an auto product, nor will we. A lot of people, when COVID hit, everybody was like, well, we're not going to be driving our cars. The companies that reacted really, really quickly to say, hey, we're going to program a COVID discount or something because the usage of cars have gone way down. Those companies killed it. They were able to throw ads on TV. They were able to move forward. And you see some InsurTechs that really did well during that time. And so I do think that's a critical component.
Yeah. It is interesting how you just talked about other products, though, because, some of your peers go out really vehemently, like putting down the other products that they don't do, and then pivoting to do them, and sort of bad mouthing different parts of the industry and then flipping into like agents. You guys weren't sitting here bashing agents. You turned agents on, and I know that's been a important, distribution channel for you, but you partner. And you do that quite a bit. Is that sort of your view on it, that we don't need to manufacture, but we do need to think about the customer's holistic needs?
Yeah, I think that's exactly right, Brian. The bottom line is if I can't do something better than somebody, I'm not going to try to do it. I'm just going to partner with best in class. And, a lot of people talk about Hippo like, how are you going to compete if you don't bundle? I do bundle. I do a synthetic bundle. I take a Hippo home product and marry it to, what I consider an industry leading auto product. And we have several players that we partner with in that space. I think partnership is key. This is not a winner take all marketplace. Homeowners insurance is a $110 billion market with only one company really having double digit share. I mean, it's something where if you truly partner, it makes a difference. And I do think agents are a great example of that. Hippo's been writing through agents from day one. And just as you mentioned, Brian, every single InsurTech, when they started, they said, we're going to be direct to consumer, right, to hell with the agents, just really, really downplayed them. And almost everyone, and I would argue to say everyone before too long, is going to say, oh no, now we're deciding to partner with agents. And again, it's not just the distribution, it's what do the customers want. If a customer says, Rick, I'd really like to buy a Hippo product, but I've been partnering with this agent for 30 years, can I access it through them? Absolutely. Like, long gone are the days where we can tell customers how to interact with us. We need to listen to them and build tech to support it.
Yeah. Well, it goes back to your IoT point that you didn't say you have to have this stuff if you want the policy, that we have some people who want it and some who don't, and there's different degree, it's a spectrum. Same thing on distribution. It's a very customer-centric view that I think is different from how we tend to do things in the industry, that no, this is what we do, and so you're going to have to bend if you want to work with us, or we didn't want you anyway. It's like, well, maybe you did.
Yeah, and look, and this all dovetails together, right? So first of all, it's like the industry, they didn't even call them customers forever. It was insured, policyholder. It's the customers were agents. And now I view agents as our customers too, but just one of the customers within the value proposition, the end customer and the agents. I think it's really important to recognize it. And it really is a situation where you need to listen. You need to listen to the customers, figure out what they want, and try to build that solution.
You do product a bit different as well. And I know that's something Asaf's talked about quite a bit. It's not just the IoT, it's not just the services, the inspection, that kind of thing. There's some basic fundamentals in the product that seem to be part of the genesis of the company. Maybe it's back to your point, like if we can't do it better, we shouldn't be doing it ourselves. And then the company wouldn't exist because it's your core product. But how do you apply that to other spaces, or as you look at new products, do you see, is there a way we can do this better and that's why we do or don't do it? Or do you have your targets and it's like, we know this is a space and this is what needs to change about it?
Yeah, it's a great question, a great point, Brian. The reality is you need to really look to see what you're solving for. What problem are you trying to solve for? And when Hippo first started, it had a pure MGA platform, a pure MGA play. And the original carrier we were looking at, they're like, here's our product that you guys can sell and distribute. And we looked at it and it was crap. Like, it was, stuck in the 60s, fur coats and pewter bowls, gold bullion, stock certificates, crypts and mausoleums. Maybe relevant to our, parents and grandparents, but probably not relevant to the modern consumer. We said, no, what do people need today? And so we built a product around that and then said, okay, how can we prevent claims? And bake that into the product through the smart home. That's all in our rate filings. It's not, it's not like we're doing something outside of our rate filings. Hippo's smart homes program is in our rate filings. And it took a lot of time, energy, and effort to work with the regulators. And I will say they were great partners in this. Some of their hands were a little bit tied, but some of them helped us get things changed within their legislative bodies to help support it. It's figuring out what you want to do that's different, build that, focus on that. We're very focused in the vertical that is home protection. And we think we've had, as there are other InsurTechs that go horizontally. I'm not saying it's wrong. I'm just saying it's different than what we do. We want to dig deep into protecting people's homes and things related to that. So as we continue to grow in new product innovation and new product ideas, you'll see it a common theme that it's in that space. Like our community association insurance, I don't view where somebody lives just in the house. I view the neighborhood. And if we can help with the pools and the common areas, and then we can build some unique IoT to link all those things things together. Home services. If we're there supporting a community, can we support the customers that we have that have homes within that community?
Yeah.
It's very much a focused vertical structure.
Yeah. I think for people who live in those communities, they consider the whole thing as their home, not their house, but their home, right?
That's right.
It's the place they live. So that makes a lot of sense. Rick, I'm really curious what the future means to you. Where do you see things going? You know, the word embedded is kicked around so much. You have all these partners and you're embedding things into your product and partnering. What do you see for maybe the homeowner space more broadly, or home protection, or the industry at large? What's shaping up here?
Yeah, I do think embedding is a significant component of the future. Let's take our space, home insurance. We don't think people actually buy homeowners insurance. We think they buy a home, and when they buy a home, they have a mortgage, and a requirement of that mortgage is home insurance. And the way people are buying homes or qualifying for loans is very different. They're becoming very digital experiences. So in our partners, as I mentioned before, we partner with home builders and loan originators and loan servicers and title companies and realtors, smart home companies, everybody sort of within that home insurance, home delivery space.
Yeah.
And one of the questions when you're working through their flow is, hey, you're going to have home insurance before we can close this loan or you can move in. Would you like an offering? So give them an opt-in. And if they say, sure, let me see, boom, there's a HIPO price. And oftentimes it's not just a HIPO price. We have, as I mentioned, other partners in the space. And in some of these channels, it's really important to give customers choice. So we show HIPO and we show others. And we're perfectly fine if they want to, if the customer wants to buy another one. And so it really does get back to what is easy for the customer to remove friction. And we think partnership is a great way to do that.
If you're certain of your pricing, then you should never care if someone binds with you or not. I mean, to an extent, you need to have enough business that you can keep being viable. But if someone doesn't choose you, go somewhere else for a lower price, that just hurts a competitor. So, I mean, it's sort of the progressive reasoning behind publishing competing rates on their website back in the early 2000s.
Yeah, and home's a little different. So first of all, I totally agree with you, by the way. And if the big knock on InsurTechs, including Hippo, has been, can you have an underwriting profit? And I think just last week we released our fourth quarter earnings, and I think people are absolutely paying attention to the precipitous drop of our loss ratio over the last couple of quarters, and we're bullish that that's going to continue because the speed in which we can make changes. But I think you need to make sure you have an underwriting profit. And in home, it's not just about price; it's about concentration. It's making sure, like Lennar as an example, again, great partner, Toll Brothers, great partnership. They build communities, and when you build a community, you might build, Lennar communities may have 1,000 homes in it.
Yeah.
We're have a significant, a 70% attach rate on Lennar homes to what I'll call a Hippo/Lennar agency product. And we like to put as many hippos as you can in that, but I don't want to have 50, 60, 70% of the homes in that neighborhood because of concentration exposure. Yeah. So we partner with other carriers so everybody gets a blend. We have different reinsurance panels to spread that risk even further because it is important to make sure that it's not, your price is right, your geographical diversification is right. And that's something that hurt us early on that we've solved for aggressively over the last couple of years and continue to do it, is making sure that spread of risk is there.
That's very much the insurance part of InsurTech, like you're saying, like that's something that people who have been in the industry that see what happens when you're over concentrated in a given area, where the danger lies in that. I think I've mentioned before on the show that I was responsible for claims in a condo program that, this MGA was really happy to have gotten the whole condo development and several of them around it. They won all the business in the area, and that's great until the hailstorm came, and it was Minnesota. Right. So there's kind of always a hailstorm coming. And we just had roof after roof after roof and siding with all these holes in it. And it's like, yeah, that was a great idea until there was a claim. When you have 100% of a risk spread out as it may be over geography, you're just getting more and more of those losses instead of diversifying.
That's right. No, and that's one of the challenges. This is something that the tech side of InsurTech learns. In other tech products, other consumer products, when you find something that is selling, you double down on it. You sell the heck out of it, right? You advertise it. Let's bang this thing together. In insurance, the first thing you need to ask yourself is why. Yeah. Why are they buying this product from me? Why are they buying so much of it from me? What have I missed? What holes do I have in my pricing scheme? Like, it's a different mindset, and it took time. Even with some of the insurance folks we had in Hippo early on, we still fought that battle of really educating the tech side of the house, going, guys, we need to be cautious. We need to have profitable growth, not just growth for growth's sake.
Yeah, you can't outgrow bad underwriting or things that, like you said, like, you should be skeptical when you're really successful, because there might be a reason why your hit rate's as high as it is. That should be concerning. And the naysayers, like, that's one of the things that they'll call out. If you're not growing fast enough, they'll call you out for that. And if you're growing fast, they'll call you out for that. So you can't win, but you just need to stay the course and be rational about it and curious as to why, and if there's something that needs to change.
Yeah, that's one of the things too. It's interesting, the entire high growth company segment of public companies has really crashed over the last few months, and InsurTech is no different. And it's really sort of the trifecta of doom for those of us that, high growth company, InsurTech, and those that went out via SPAC. It's like they've become the bane of all evils. And what we've recognized, and I finally think the street is starting to recognize, that not all InsurTechs are created equal. There's some very different capabilities within them, and they're starting to sort of separate out the cream is starting to sort of rise to the top. But it is interesting because, our view now is we're not managing to the street. We're not managing to stock price. We're managing to what's in the long-term best interest of our customers in this company over the next decade, not over the next quarter. So it's actually sort of given us a little bit of comfort and peace of mind, going, I don't need to worry about it if the stock's going up and down. There was a day a few weeks ago that the stock went up 10% in one day. We didn't announce anything. We didn't do anything different. It just went up 10%. Next day went down 4%. And so, those of us that run this company, we go, look, it's going to do what it's going to do because of, macro challenges. Let's just build the best company we can over the next decade.
Yeah. As a shareholder, I shouldn't like that, but I do, because insurance is not a day trade. Insurance is let's be honest, a multi-100-year industry, and we're not setting up companies as insurers, MGAs that turn into insurers for a 3-4 month return period. And even those policies are longer than that. So you got to think longer term. So I appreciate that. But I think a lot of investors, maybe through the hype cycle of some of your predecessors who went public, didn't get that. And it was sort of ignorant money that you have to think longer term, and there's dynamics that have to change, and they're not all the same just because, a couple of companies have clever names and went public around the same time. I was curious about. Sorry, go ahead.
No, just 2 words for you, Brian. Price averaging. That's all I'll say.
That's what I've been doing. I had to full disclosure that I'm a shareholder anyway, so I figured that was a way to do it. I did want to ask you about why SPAC, but I think now that's sort of irrelevant, because the way the market's gone the past few months, is SPAC or not, didn't seem to matter. But generally, I've asked others the same question, but it's curious, and I wonder if it's a model that will not persist going forward because of some of the tougher times that folks have had with it.
Yeah, I think it's interesting, because it's like anything else. Too much of a good thing is a bad thing, and I think there was just overweight given to the SPAC market. We were prepared to go public via traditional IPO, and our logic of going SPAC is, in the whole SPAC process, you also get to participate in a PIPE and have really deep conversations with prospective PIPE investors, because all of that is happening, sort of ahead of time. And so our logic anyway was, look, we think that insurance is what you said earlier. It takes time. You're competing with companies that have cohorts that are 30, 40, 50 years old. And what you're trying to do is accelerate that, which I think we've successfully done. But we thought that education would make sense. And then the market changed, right? Then SPAC started to shift while we were in the middle of it, frankly. The sort of the shine sort of came off SPACs a little bit, and we continued to go through it. But the one thing that put us in a really good position versus others is through that process, we raised a ton of money. Yeah. And we're sitting, I think we just announced our earnings call, we've got, approximately $850 million cash. The ability to have that allows us to weather the storm, allows us to focus on what's important. And, we were able to do that via the SPAC marketplace.
Yeah. Well, in my second book, Dan Reed talks about material advantage, and that ultimately that's what you got to have. You can't just be new and better tech, and because eventually someone else will be newer and will have better tech than you. Can't just be the clean sheet, clean slate kind of thing. And I do think, and I said this to you, from the first interview we did, I do think you have a material advantage. So I loved seeing the quarterly results and the progress that you guys made. And I to me, yes, there was favorable lack of cat activity and exposure, but the flip side is I think there are dynamics in what you're offering that now that the engine's going are really starting to pay dividends. So it's great to watch that. And I appreciate you coming on and sharing some thoughts with us, Rick.
No, always, Brian, always a pleasure. Love to do it anytime.
Thank you to Rick for coming on the show. It's good to sit down with him. I did get to interview him really early on. It was like early on in the lockdowns, spring, I think, of 2020. And I didn't know a ton about Hippo, which was a good way to learn about it and some of the differentiation. And the more I looked into it, the more I saw, it's easy to get caught up in the hype of startup insurers, InsurTech, MGAs, carriers, et cetera, and think they're all the same. But this was different, and it still is different. There is a clear point of material differentiation when we look at the products, the coverage itself, but it's not just an insurance product, and that's not just marketing. That is real. From there, we didn't talk about their acquisition of Shelter way back in the day. The founders of Shelter have sponsored this show through their new company, Ascend. But, this was about inspecting the homes, working with the homeowners to make them more aware of the risk and the status of things and the maintenance and the potential maintenance issues that could lead to claims, help them do something about that. It was very proactive. And not the way the industry has done things, where we tend to, just respond after the fact. Well, what if we put some effort into doing things ahead of loss and maybe even put some money into that? Could we reduce our losses? And, I applauded Hippo for doing that, in addition to creating cover for things people would expect to be covered, but were not part of the traditional policy. And then they went beyond that. They've been an early adopter of IoT and trying to bring that into the way homeowners look at their risk and manage it. They mentioned, Rick mentioned the partnership with Lennar. I think that's really smart, building it into the home before someone's even moved into it. So there isn't even a discussion about it. It's just your home is able to make smarter choices with you on board to help protect against water leaks, water damage. I mean, anyone who's in homeowners claims knows that on the non-cat side, escape of water is incredibly huge as a driver of loss. And Hippo does work with SimpliSafe, who sponsored this episode, which is great to see, a company that is trying to help carriers, help insureds do better with the risk. And Hippo has really been at the forefront of making that happen. So great to have Hippo here. Great to have support from SimpliSafe on this episode in particular, which is just kind of a nice happenstance, the way things worked out, that those two things came together. But that was pretty cool for this episode. I hope it was valuable for you. It's a great reminder to look into that material advantage. Hippo has it. I love seeing that their results are starting to prove that out. So I think that's one to keep watching. It's not just hype. They have built a significant book. They have built it in what I think is a smart way that continues to get smarter. They're learning, they're growing, and they're making good choices going forward. So good luck to the team at Hippo. Thank you to all of you for tuning in. I hope that this was valuable for you, hearing a little bit from Rick himself. And I hope to see you here next time for another episode of The Future of Insurance. Thanks, everyone.